here's your ball drop right here. Big drop. There's your first big bounce. Secondary drop. Next bounce. Third drop, smallest bounce, and now it's on the verge of breaking to the downside. So that's what I call the bouncy ball pattern. It's when you have a flat bottom and each subsequent bounce is smaller and smaller and smaller. The first obvious technical level, assuming we're breaking here at this major level that I've highlighted now for the last couple months as a breakdown potential level, is 54. Why? Pivot high, pivot high. Very simple. This is a mountain peak. This is a mountain peak. They both match up. That's going to be technical support. Now, again, is that an amazing support level? No, frankly, it's not. It is a support level, but there's varying degrees of support, and therefore this is really important here, right? So again, I think it hits this. I think it gets a bounce, but then I actually think we're going to go even lower to that $50 level.
Silver's chart now looks vulnerable because each bounce has become weaker while the same floor keeps getting tested. That type of action often warns that buyers are losing control before a deeper break. The next move may not cancel the long-term bullish case, but it can still punish late buyers. Patience matters here because obvious support can still fail quickly under pressure in metals. Gareth Soloway, a respected technical analyst known for his chart-based approach to commodities, crypto, and equities, argues that recent metals weakness should be viewed first through price structure, with emphasis on how repeated failures reveal fading short-term momentum. The key pattern is the bouncy ball setup, a hard drop, a strong first bounce, then smaller rebounds into the same support zone. If that floor breaks, silver can first test the $54 area, where prior pivot highs create support. A bounce is possible, but it does not look strong enough to end the decline. The cleaner target is near $50, where fear-driven selling could finally reset sentiment before the larger physical and inflation-based case reasserts itself. Now, we present the clips from Gareth Soloway's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
Let's go back to that topping tail. Here's your topping tail right over here, guys, on silver. This is what alerted me. When I saw this, I said, okay, we're real close. And in all fairness, it made me question myself a little bit because you had 2 consecutive up days after that. But when you put in a topping tail, and you can see the long tail here, right? It's a long tail with a close in the lower 25%. That's a key technical function of a topping tail, which is a bearish reversal signal. But after that, we had 1, 2, and even a third doji candle, and even we pierced the high. But the way a topping tail fails is, does it close above? Do you ever have a subsequent candle after close above the high of the topping tail? And look, didn't close above, and pierced it, and didn't close above. And so this topping tail was still valid as a sell signal on silver back here when it was trading as high as $120 an ounce. And then obviously we know what happened here. It had a massive drop. Now, the breadcrumbs that have told me this is ultimately going lower is in the bouncy ball pattern. I want to show you what the bouncy ball pattern is. Well, let's do this. Here, let's draw it in and do a little test case or educational piece here. Bouncy ball pattern, let me move that out of the way, is when you have a scenario where you drop a ball from high, and what happens on the first bounce? Does it bounce just a little or does it bounce the most? It bounces the most. Then it falls back down, it bounces less. It falls back down, it bounces less until it finally breaks to the downside. Meaning, in other words, each bounce is high, lower, high, lower, high, lower, high, and each time it hits, it weakens the floor more and more, okay? So again, we'll continue to monitor that and see, but this break here is what I think is now going on. And you can see, here's your ball drop right here, big drop. There's your first big bounce, secondary drop, next bounce, third drop, smallest bounce, and now it's on the verge of breaking to the downside. So that's what I call the bouncy ball pattern. It's when you have a flat bottom and each subsequent bounce is smaller and smaller and smaller. The other thing to watch here is a secondary, and by the way, these are just incredible educational points. This next thing I'm going to show you will make a lot of sense when you understand it, right? So when we look at this, here was your first hit, and here was your second hit. Now, which one do you think is showing relative weakness to the other? All right, so here you came here, and here you went lower. Both were tails, right? So again, we both had tails. So this one came down here. You can see the tail, and this one had a tail as well, right? But it went lower. So obviously, this one's weaker. This would be your weaker hit. Now, we look at this hit, with this pierce of this wick here, and then what about this one? Well, interestingly enough, this one didn't go as low. So is that stronger or weaker? What you have to look at is the close. So whenever you have, and this is a really important point, tails or wicks are important when matched against other tails and wicks. But a lower close is always going to take precedence. That is the most important thing. So the question then starts out to be, here you have a tail that dips, but over here you have an actual close below the line. Which one's weaker? This one is, right? So you have weak, weaker, weakest, and now we'll see. This one could be a close down here that's even lower than this plus a lower close. That's the ultimate breakdown one. But you see how it's dropping breadcrumbs for us? It's telling us in the chart how each hit and the lower, I mean, here's lower low, but this one's not a lower low, but it had a close that was lower. And closes, again, above or below levels are always more superior than tails. Amazing stuff, guys, when you delve into it. All right, so let's discuss where this is going. Where on earth is this going? So the first obvious technical level, assuming we're breaking here at this major level that I've highlighted now for the last couple months as a breakdown potential level, is 54. Why? Pivot high, pivot high. Very simple. This is a mountain peak. This is a mountain peak. They both match up. That's going to be technical support. Now, again, is that an amazing support level? No, frankly, it's not. It is a support level, but there's varying degrees of support, and therefore this is really important here, right? So again, I think it hits this. I think it gets a bounce, but then I actually think we're going to go even lower to that $50 level. And again, folks, just a note here on that is I always hear the rebuttal, well, 50, it hit that in 1980, it hit that in 2011, margin, inflation adjusted, it should be way higher. I agree with you 100%, 110%. It should be way higher. But remember this rule. Short-term markets are ruled by emotion. Long-term markets are ruled by fundamentals. So again, the whole argument of there's way too much paper but not enough physical, there's a physical deficit. Every argument you're making is valid, but it's the bigger macro picture that it's valid for. Short-term, every move in the short term, greed and fear. That's it, greed and fear. That's what markets are ruled by. We as humans, we can't help ourselves. Greed and fear, all right?
Gold is not being treated as broken, but it is still trapped inside a wedge that demands patience. The $4,000 area is the first support to watch, and if time passes without a breakout, that same structure may line up closer to $3,900. A downside break would open the door to the stronger long-term buying zone around $3,500 to $3,600. The important distinction is timing. Long-term fundamentals can remain bullish while short-term traders continue to sell, as fear controls the next candle. That means a decline in major support should be seen as an opportunity, not a failure. The better plan is to avoid chasing strength, wait for the market to reach the deeper zone, and then build exposure when risk is cleaner. A decisive upside wedge break would delay that lower target, but not remove the need for discipline for now anyway. Now, let's get back to the interview.
So let's go on to gold real quick, and then we'll touch on platinum and palladium. Gold here, guys, is moving lower. It's getting a little bit of a bounce early on. I still think we're stuck in this wedge pattern, which means support around 4,000. I'm going to watch very closely which way does it break. Does it break to the upside out of this wedge or to the downside out of this wedge? If it breaks to the downside, you have a little support at 39, which, by the way, could coincide. Like if we look at this here and we draw a trend line and then we kind of drag these out, look at this. If we just drag this out a little bit longer, I mean, you get into August, it's going to match up, right? It's going to literally match up with this portion right here. So again, right now, the yellow line here is at 4,000 approximately, but in a month and a half, it's out here, and it's around 3,900, which would then be dual support right there. But the point being is, where is price going to go? All right, so let's just say it stays inside of this area. Does it break out or does it break down? If it breaks down, it goes to my ultimate major buy level here at that 3,500 zone, 3,600 zone. That's where I will buy long term. All right, now I already have long-term holdings. So again, I don't really feel the urgency to buy gold because I have long-term holdings. But if it went to 3,500, I'd say, yeah, okay, I'm going to buy long-term holdings at that point, right? So again, just keep that in mind. All right. By the way, before we get into anything else, just a reminder, guys, my videos are sponsored by Rumble, the Rumble wallet. Absolutely amazing. If we get down to 4,300, you know what I'm going to do? I'm going to pick up my Rumble wallet and buy gold right there. Boom, boom, boom. I use it for swing trading and crypto as well. Obviously, crypto. It's used for crypto, but you can buy and sell gold in it as well. But for swing trading, it's so easy. It's on my phone. You can download it via the QR code there, or I'll put the link in the description. But it is awesome, and it's just such an easy way for me to be like, yeah, gold's at support for a swing trade, boom, boom, boom. If I'm buying long term, I'm probably buying and storing it at some vault, the physical, right? But shorter term, where I need to there's too much of a premium on selling it back, it doesn't make sense to buy the physical for short-term trading. You just do it via something like the Rumble wallet. All right, back to the charts we go. Let's go on to platinum and palladium. We'll start with platinum here. Folks, where is platinum trading? Platinum is coming down here. I am really starting to eye a key level on platinum. In fact, it's a zone. I have a zone on platinum. There's a gap fill right here, right, all the way down into this range. And we can extend this out. Look at this, guys. Right out here, you could even argue maybe just a tiny bit lower. So it encompasses this pivot low, this pivot low, this pivot low, and then the gap fill. All of this is going to be a massive zone of support, basically anything between 1,600 and 1,500. So if we get down into here, I'm going to start to nibble on a swing trade on platinum. If you're in smart money commodities, you'll obviously get those live alerts when I buy and sell. And then palladium here, if we look at palladium, I had a buy down here. Why? Because it was an obvious level. I already took profits on it, and that was good that I did. It was right there. Notice pivot point, boom. There was the bounce. We got out. Now it's coming back in. Where's my next buy level? Same sort of deal here. I'm going to be focusing in on this zone right in here. Basically 1150 to 1100. That looks really attractive to palladium. Now let's look at copper real quick here. All right, copper. This one I nailed, folks. If you watched my last video where I covered copper, we talked about this short-term breakdown. We had the upper parallel, which was resistance, right? So we knew it was resistance up here, but it kept on bobbing up against this yellow line. Then it broke, it retraced. Last video I did was right up here. I said it's coming down, and it is coming down. So copper collapsing here. Not collapsing, but it is coming down significantly.
Platinum, palladium, and copper add another layer to the same message. Platinum is approaching a broad support zone between $1,600 and $1,500, helped by a gap fill and several prior pivot lows. That area looks attractive for a swing trade because it gives a clear zone where buyers may defend the price. Palladium has a similar setup, with the $1,150 to $1,100 area standing out as the next stronger buy zone after an earlier bounce already delivered profits. Copper, meanwhile, has already confirmed weakness after pressing against resistance, breaking down, and then retracing into a failed bounce. That kind of action points to more downside pressure before a durable turn. The broader prediction is that metals can remain under short-term pressure even while the long-term story stays constructive. Emotion rules the near-term market, while fundamentals rule the bigger cycle. The strongest opportunities are likely to come after technical washouts, not during crowded rallies. Waiting for support zones to be reached gives buyers a better entry, clearer risk, and more confidence when the next commodity advance begins. If those zones are reached with heavy selling, the better trade may come from fading panic rather than joining it late after confirmation appears clearly. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.